Welcome to The Explainer. Today, we're digging into a really fascinating business puzzle. How can a company sell more food than ever before, but actually end up making less money? We're talking about Hormel Foods, and their story is pretty wild. Let's get into it.
So, to kick things off, a little pop quiz for you. Take a look at these three things. You've got a can of Spam, a tub of guacamole, and some organic chicken sausage. I mean, what on earth could these three possibly have in common?
You've definitely seen these two in the grocery store. On one hand, you have the absolute legend, Spam. It's been in our pantries for decades. On the other hand, holy guacamole. It's fresh, it's in the refrigerated section. They honestly couldn't be more different, right?
And then you throw Applegate into the mix, a huge name in the natural and organic meat aisle. Well, the surprise answer is they're all part of the same family. They are all owned by one company, Hormel Foods.
And that little trio of brands right there just goes to show you Hormel is so much bigger than that famous blue can. We're talking about a massive, sprawling food empire with a finger in just about every pie, or every aisle of the supermarket.
So how does a giant like this actually make its money? Well, it's pretty much split into three big pieces. The lion's share, 62%, comes from retail. That's all the stuff you and I buy in the store. Then you have 32% from food service, which is them selling to restaurants and schools, and that last little 6% slice is their international business.
But this is where the story gets really interesting. Kind of weird, actually. Hormel themselves said they had strong top-line performance, which is just a fancy way of saying they sold a ton of stuff. But in the same breath, they said their earnings were challenged. So how is that even possible? Strong sales, weak earnings? Let's unpack this whole thing, starting with the good part.
All right, first up, the good news. And believe me, it is really good news for their sales department. Hormel is selling more food than they ever have before.
Okay, get ready for this number. For the 2025 fiscal year, they pulled in a whopping $12.1 billion in net sales. That is a huge figure. The cash registers were definitely smoking. And this wasn't just some one-off lucky break either. They saw consistent growth, quarter after quarter, all year long. This is what's called organic sales growth, which basically just means they grew because people were buying more of their core products, not because they went out and bought another company. And this growth happened across all their divisions, which shows that people are genuinely hungry for what they're selling.
Which brings us to the big $12 billion question, right? If sales are completely through the roof, why are profits taking a nosedive? Where did all that money go?
Well, the way Hormel explains it is actually a pretty neat metaphor. Think of it like flying a plane. Their strong sales are a powerful tailwind, pushing the plane forward, making it go faster. But at the same time, they're flying directly into some pretty nasty headwinds that are trying to slow them down. So what are these headwinds exactly? Well, it's a perfect storm, really. First, elevated input costs. That means everything they need to make their food, the pork, the turkey, even the avocados for that guacamole, it all got way more expensive. Then you've got folks like us feeling the pinch from inflation. And to top it all off, you get crazy stuff like bird flu messing up their turkey supply chain. Now, all of this puts a huge squeeze on something called the operating margin. It's a bit of a business term, but the idea is super simple. For every dollar Hormel makes in sales, how many cents do they actually get to keep after paying for all the ingredients and workers and shipping? Well, that number, it dropped a lot. It went from 9% last year all the way down to 5.9% this year. Okay, so a profit drop like that might sound like a five-alarm fire for most companies. But here's a crucial thing you need to know about Hormel. For 60 consecutive years, they have increased the dividend they pay to their investors.
That incredible track record makes them what's known on Wall Street as a Dividend Aristocrat. And trust me, that is a super exclusive club. It tells you that even with these short-term struggles, the company's foundations are absolutely rock solid. So, what's the game plan to get those profits growing again?
Well, Hormel isn't just sitting around waiting for those headwinds to magically disappear. Nope. They have laid out a very clear three-part strategy to fight back and get their earnings back on track.
And I think this quote from their president, John Gingo, really sums up their whole attitude. They're not looking at this as a crisis. They're seeing it as a new chapter, a chance to get things right. It's a proactive, forward-looking mindset. Their comeback plan really boils down to three big ideas. First, consumer obsession. which means getting laser-focused on what customers really want. Second, beyond boundaries, which is all about finding new places and new ways for people to use their products. And third, becoming future-ready, by basically modernizing and simplifying how they do things to be more efficient.
And look, this isn't just a bunch of corporate buzzwords on a slide. They have put some very real numbers behind this plan. They're projecting not just more sales growth, but a powerful rebound in their profits. I mean, check this out. They expect their adjusted operating income to jump somewhere between 4 and 10% next year. That's a big deal.
Okay, so let's zoom out for a second. We've talked about sales, costs, margins, but what does this whole corporate drama actually mean for the rest of us?
Because really, this whole Hormel situation, it isn't just about Hormel. It's a perfect snapshot of what pretty much the entire food industry is dealing with right now. They're all trying to navigate this storm of rising costs while still convincing us to keep putting their products in our shopping carts. And that leaves us with the central question, the real cliffhanger for Hormel and every other food company out there. Their entire comeback plan depends on a very delicate balancing act. Can they figure out how to keep their shareholders happy with growing profits while also keeping their food affordable enough for your family? How they solve that puzzle, well, that's the story we'll all be watching.